Hi guys, it's Greg Clesius with Gulf Coast Fishing Homes Realty. Uh, every week, Zillow publishes a mortgage rate index. This mortgage rate index report is for May 27th, 2020. We are in the middle of the coronavirus pandemic. Even though markets are getting better, we're seeing a lot more buyer activity. We're seeing a lot more sellers starting to list their homes on the market. And we're really kind of ramping back up after the doldrums of late April and May. We're seeing amazing activity. So what are interest rates doing? 30-year fixed rates were quoted by Zillow at 3.48%. Remains near all-time lows this week. They're saying in their report that the average mortgage rates rose slightly over the past 7 days, but remained quite low at historic lows. After a period of immense market uncertainty that at times had led to unpredictable rate movements, the relationship between bond rates and mortgage rates appears to be reconnecting. Generally, what you can borrow money in a bond that's funding a corporation or funding a business or funding government is tightly linked to the same kind of asset on real estate. And over the past couple of weeks, they've been disconnected by Europeans flooding the market, buying bonds as safety, and negative interest rates in Europe. And if you don't know what a negative interest rate is, imagine in America, if you get a bond or get a mortgage, you give $100,000, they're going to pay you interest on that $100,000, or at the end of the bond, they're going to give you back the full amount plus interest. A negative interest rate is where you give them $100K and 10 years later they gave you back 95 because it negatively pulled off the principal that you had invested. That's horrible. It's a great way to finance things if you're the person borrowing the money today and paying back less tomorrow. That's awesome. But if you're an investor and you're loaning people money and getting less back over time, that sucks out loud. This whole turmoil of this, the fact that you have 7% of homes in forbearance really is killing the FHA market. Buyers who used to be able to buy FHA homes with credit scores under 600 are just shut out of the market. With my sellers right now, if I'm getting an FHA offer, I'm asking for a pre-qualification that's less than a week old, simply because that person's credit score matters a ton. And the more volatility there is, the more forbearance, the more unemployment there is, the tighter the FHA credit score percentage is. And the reason why is real simple. A lot of FHA buyers or other jumbo type package buyers are really close to the line on making it. They can almost automatically get the loan and ask for a forbearance. So imagine you're a home buyer, you buy it with an FHA loan, you get issued the loan in 60 days when your payment's due, you call the bank and say, hey, I can't pay for this, I lost my job, or I just don't have the money to pay for this. They're automatic forbearance. You may go a year without making a payment, and mortgage lenders just don't want that nightmare. So they're really tightening up on credit scores. Now, if you're a well-qualified buyer, if you have assets, if you have income that's provable, your job has not been affected by coronavirus, you're going to get great rates. You can, if you buy with points, you can get rates in the twos. But if you're a buyer who's tight to their credit score, have no money for investments, and your job's a little uncertain, loans are hard to come by. My name is Greg Clesius. I'm the broker owner of Gulf Coast Fishing Homes Realty. If you're looking for this kind of insightful information about the mortgage business and how it relates to real estate, give me a call at 813-394-4356. I'd be more than happy to allocate some time to talk to you about your personal situation and see the best way we can help you. Have a great day. Bye now.